Good evening, traders. It is Sunday, May 3rd, and I'm doing some analysis. The overseas markets are weak. We've got the S&P 500 down about 50 points overnight. We're going to have a soft open on Monday. Should put us at about the SPY 278 level. You know I've been bearish. I told you last week we had gangbuster earnings from lots of mega cap tech companies. Wednesday, we got big numbers out. Microsoft was great. Tesla was great. Facebook was great. Market should have been in go rally mode on Thursday. Not so fast. Market actually sold off Thursday, but that's okay. We've got Amazon and Apple after the close. Friday, we had a nice big down open, and I'm short the SPY. If you read my daily market comments, you know that we got short at 288 about a week ago. We added to that position at 286, so our average price is 287. I think that we're going to pull back. I think that the recovery is going to take much longer than expected. States are just now starting to reopen. However, lots of businesses are reluctant to reopen when they don't see the demand for their products there. And they also don't believe that customers are going to come rushing right back in. People are scared. The media has everyone scared. I went to the supermarket this weekend. Everybody had their masks on, and it just felt like a really eerie, kind of spooky feeling where people are skeptical as to what's going to happen next. The stimulus checks have been sent out. I don't sense the people are going to be returning to their previous spending habits when they are wondering if their job security is there or if the businesses are going to lay them off after the PPP stimulus ends, which is a possibility. So we're seeing a lot of companies and particular sectors file for bankruptcy. The energy sector's been hit hard. Diamond Offshore is one of them that has reported a bankruptcy. Continental Resources is capping their wells for right now. We've got retailers are also struggling, seeing a number of casualties in that space, be it Macy's or Kohl's or J.C. Penney. So these sectors are really going to struggle. We've got the unemployment numbers coming out this week, and they're going to be pretty dire. We had an FOMC meeting last week, and the statement was very dovish. We had unbelievable round of earnings from mega cap tech companies. If that can't get us through this resistance level right here, nothing will. And so we've had this nice big bounce right here on optimism that the coronavirus spread was starting to decelerate. That's good, but everybody expected that. And now they're also wondering what's going to happen in the fall. Is it going to pop right back up again? And those are concerns, and we've got some really heavy lifting to do right now. Businesses have to get back on track, and they've got to do it immediately. A lot of the small business loans, companies are having a difficult time securing them. So it's really tough sledding. And I'd mentioned to you over the course of the last 2 months, when we had this big sell off here, we were looking for this bounce. We positioned ourselves appropriately. We sold tons of out of the money naked puts. We sold some bullish put spreads. Those are expiring. We made a lot of money on it. But as we started to get into this compression right in here, I've been pointing out all the dojis and the fact that the market momentum to the upside had started to wane. Those are the warning signs. Last week in my videos, I'd also mentioned to you that all the way up in here, yes, I'd always try and take a short position or two during the day because how those trades fare gives me an idea of kind of where the market conditions are at. And I had a difficult time making any money on shorts all up in here. And that told me that the market wasn't ready to roll over. But last week, my shorts were starting to pay off. I was starting to see some very consistent intraday price action with sustained moves. And I'd been mentioning that in my comments all last week. I said, hey, you know what? The short side's alive again. We can start trading it. And that typically is a warning sign that the market's going to roll over. I also pointed out to you last week that the dogs were barking. What that means is that the rally is so extended that you're seeing a rotation into some of the laggards, and that is usually a sign that the rally is reaching its peak. I believe that we've seen a buying climax. We got to the 100 week moving average. You know, I've been pointing to this level for about the last 3 weeks or so as my first target point, and you can see the 100 week moving average right there. And we stalled just before it. We poked through it, and now we've fallen back below it. We've got the S&P futures down 50 points overnight. That's the opening indication. So we're gonna have a soft patch here, and we need to position ourselves on the short side. And I've got a stock for you tonight. I'm going to show you how easy it is to find. Got lots of great searches that we can use for shorts. Pop Bear being one of my favorite. Heavy selling, also good. But I'm going to go into custom search. And I'll show you a search that I like. We're going to go into option liquidity. We're going to use a rating of 3 or higher. 3 is very liquid options, not a problem there at all. And we're also going to be looking for a company that's announced recently. So let me go in. I'm going to click earnings date previous. I'm going to click that, and we're going to go with Monday, April 27th. And we'll go to, let's do maybe May 1st. We want to make sure that we're able to get the stocks that reported earnings last week. I don't want to go too far back in this. So May 3rd will work. And the point is, I want to be able to find stocks that are struggling. So show me those stocks that really were not able to catch a bid after they posted earnings. So how do I find that weakness? ADX is a momentum indicator that we use. I have this optimized for each one of these time frames. And if I go in and use a 1 hour basis, that means that the stock's going to have been pretty weak over the course of the last 2 days at least. So if I go into the search and I start clicking through these symbols, I'm going to be expecting to see some weakness. So I'm going to go and take a look at AAL. Yes, that's been super weak. You can see how it's down near the support level. And I'm going to move this off screen because I want to make sure I'm in that daily chart and not the weekly chart. And then we can also see the earnings release dates. But it's so low that we really don't want to trade it. AMD, I'm going to move this off to the side so we can see the chart a little bit better. AMD had major resistance here on a daily chart. Try to get through that resistance. 1, 2, 3. Nope. Now it's failed. We've got this upward sloping trend line that's been breached, coming up on the 100-day moving average. Well, what about shorting it here? No, I'd rather see it through that 100-day moving average. That's going to lend support. Let me cut right to the quick. UPS, I like it. Why do you like it? Well, you can see here that the stock really has had a hard time rebounding off of the low here. And you have a lower high, even with this market bounce. You had a high here, a lower high, couldn't even get back up to that horizontal resistance level to check it. It barely was able to fill this gap right here. You see that horizontal support, then that horizontal support fails. Now this level becomes resistance. And it did prove to be resistance. It tested it once, twice, 3 times, and now it has backed off. And it tested it here as well. So this is a formidable resistance level. That gap has been filled now. It's below the 100-day moving average. There you've got the earnings before the open. If you draw your upward sloping trend line, you can see that the stock has breached that technical support level. It's had nice relative weakness on Thursday and Friday. I think this stock is going to continue to go down, and you can see right here that it's got pretty heavy volume. So we're starting to see some good selling on that. I like selling a out of the money bearish call spread, and I would use that resistance level right there. We conveniently have that 100-day moving average, so we can click trade and go above that 104 strike price. Earnings are out of the way, and that's why I wanted to use that as a criteria. Let's go in and see what the May 15s are like. And again, we'll be looking at maybe the 105, 106 call spread. And right here, you can see that we're not going to get a whole lot of premium for it because we're so far out of the money right now with the stock down at $92 to try and get premium at the 104 strike price. It's not going to work for us. So we're going to have to go closer to the money. We're going to have to find something that we can sell that still has some resistance that the stock would have to get through. And that opening price right there at the $100 price range, let's see if there's anything in the $100 calls. There may be a little bit of premium there. So I'm going to click on that, and you can see the spread is offered at 20 cents. If I'm doing a $1 credit spread, $1 between the strike prices, I need to be able to get a 20-cent credit in. I think this stock is going to be a good short. If I look at the fundamentals, UPS is going to have stiff competition because the airlines are talking about shipping a lot of orders for Amazon and other companies right now because their planes aren't loaded. They're looking to do anything that they can to generate some income, and I think they're going to start competing with UPS on some of those orders and some of those deliveries. In any event, you can see how the stock has really started to roll over, couldn't get through that resistance. I think this sets up well for a day trading short tomorrow. I'm going to be keeping an eye on it. I may also swing trade it on the short side. If I see an attractive short-term, out of the money, bearish call spread, I will consider it. I may have to go right here at the $96 level, and I'll probably end up selling something that's right at the money, probably one that expires this week, which the expiration date Friday is May 8th. We'll go in there, just get an idea of where that $96 call is trading. And let's see if there should be some pretty decent spreads if we're going that close to the money. You can see stock is at 92. So if we go with a 95, 96, and again, this would require that the stock is super, super weak tomorrow, and I'm seeing nice relative weakness. I would consider doing something like that on a very short-term basis. And you can see that it's offered at 61 cents. I've got $1 between the strike prices. I need to get at least 20 cents for that. Maybe I would consider a trade like that, maybe even 30-cent credit for that. And then as the stock starts to come in, I don't plan on holding it because it's so close to the money that if the stock rallies at all, I'm going to be in trouble. But if I can sell it for 25 or 30 cents and buy it back for 15 or 20 cents, it's still a nice day trade and perhaps something that I can hold overnight Monday. But that's a trade. The point here was that the market's going to be selling off. We're going to see additional weakness. I believe that we're going to see some pretty sustained market selling during the course of the next few weeks. I've been projecting this. I've told you that as soon as mega cap tech stocks reported earnings, that the air was going to get let out of the balloon, that this recovery was going to take much longer than anyone expected, that consumers were not going to rush out and start eating in restaurants and spending a lot of money. They've just come through an incredible amount of hardship. More than half of the people polled can't afford their May rent. We've got people having property taxes that are coming due. All sorts of issues are going to be plaguing the market for the next 2 months. And hopefully I'm wrong. I hope that the recovery goes on without a hitch, but I suspect that all the good news is priced into the market right now, and this rally is overextended. How far might we fall? I really don't know because it's going to be dependent on how quickly the economy recovers. So I'm going to be watching the data points, and I'm going to be watching corporate comments very, very closely over the course of the next 3 or 4 weeks. But if the startup starts to really struggle, I'm going to get more and more bearish because every week that this shutdown lasts, the economic recovery becomes exponentially more difficult. So we need to get out of this, and we need to get out of this fast. And I don't know that that's going to happen. So start looking for shorts. I think we're going to have a good opportunity to trade from the short side this week. UPS sets up nicely, and that's a stock that you might want to consider tomorrow. Watch it. Watch for that relative weakness. Please sign up for this YouTube channel and subscribe. Turn on your notifications, and you'll never miss one of these videos. If you like the content, please give it a thumbs up. Thanks so much. Have a good night. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.